too in that second half. So I'm sure you might have some questions, that you've jotted down. So we'll open it up and let you guys talk too. So enjoy your lunch, and don't forget to like our Facebook page, like I said, because we're going to give away this great little mug, and we'll be able to look and see all the new likes from today. So I hope you do that. So enjoy. Oh, we did? It is. Let's see. I can open up that.
I wonder if you close an account, can your payment history go away? If you close an account, can your bad payment history go away?
Well, and I think
Say you're late does that stay?
That's true.
That's why we get
That's true.
numbers too, because sometimes
You close it, but yeah, if you had a bad,
But that obviously hurts.
wouldn't it maybe eventually go away? But it, maybe like you said, take like a year or two. Well, yeah, but I don't know. That's
Or is it just on there as closed, but you're able to see everything? I was tricked.
Well, I guess it'd almost be like any of them, right? Like you can always make it better over time. Like even if you left that right, it could still go up. So maybe you close it and then work on fixing it over time. Eventually, yeah. But I guess you're right. It's still like show out.
Right. It's like, okay, I just heard this from two completely different people. Yeah.
Then you'll have those ones that are stubborn and they just don't. Well, my Credit Karma, I've literally had people argue with me, and that's not right because Credit Karma is telling me, and I'm like, well, I don't use Credit Karma to give you a loan.
Yeah. Like, I use Credit Karma. That's mostly
Just good information, though.
I'm just trying, I'm in repair mode. It's not like I'm
Stuff I should know, but don't totally know.
Exactly, and I tell people that all the time. I say, here's how Credit Karma is a benefit to you, and the fact that it's free. This is where it can benefit you, but as far as tracking what your no. So, totally agree with that.
Yeah.
Glasses.
Can having a bad payment history ever go away? If you close an account, say you were bad at paying it, but then
Like the late payment?
The net sounds.
Yeah, and that's part of what we do. We'll kind of talk about that here in a little bit, the negative stuff. But negative payments can be removed, but theoretically, they stay on your credit report for 7 years. But the thing is with late payments, usually after 2 years, they don't really impact your score that much.
This is good stuff to know.
Okay.
And these True Life stores, I feel like will get you because they're like, oh, you'll get a discount if you open 10%. And of course, you never use it, but you opened it.
do you just decide to be gluten free, or do you have?
I don't know. I saw something somewhere that because I was in so much pain, my knees, my ankles, my feet. And then I just saw something that said like, oh, if you have inflammation, it could be gluten. I was like, well, I'm just going to try it. I'm going to go gluten free for 6 months and see what happens. And all of it went away. My plantar fasciitis, my knees,
Wow.
all this pain I had just went away.
So you like Austin? Just kidding. It's all like about gluten free.
No, I'm totally like not Austin.
I'm just kidding.
Like kind of like a redneck that's gluten free. I wish I had a blog called the Gluten Free Redneck.
No way.
No, I said I should.
Oh yeah, I was like,
How long
that's
have
good.
you
That story's
been gluten free?
Since 2012.
Oh wow.
But yeah, it's made a big difference. I mean, I would go get a sandwich or something. I would just go to Which or something to get a sandwich, and my stomach would be on fire for like the next. I carried a thing of Pepsi Complete with me, and I would take like 4 or 5 a day. I was just so much stomach, and And I would notice things like I would drink a beer, like maybe like Shiner Bock or something, and my nose would get clogged up, my eyes would get watery, and I didn't think of like what would be causing it.
Yeah.
I didn't know. I thought it was the alcohol.
Right. You're like,
It wasn't.
It was like one more beer.
Yeah, it was gluten free. So, but there's certain things. I mean, like Corona doesn't bother me because Corona's so cheap. It's mostly corn and rice.
yeah.
Very little barley.
It's from Mexico.
From Mexico, yeah, so it doesn't bother me. But yeah, I've adjusted. I mean, there's actually I eat a lot of gluten-free bread, so
Yeah.
and it's fine.
Well, especially like nowadays, I feel like there's more gluten-free options.
Oh no, there's like
They're starting to be like around here.
yeah, there's stuff that like cakes. I think for a birthday friend brought over. They were having they were celebrating their little girl's birthday, but at our house, and so they brought over gluten-free cake. I was like, I guarantee if you eat this cake, you would never know
No.
that it was gluten-free. There's just no way.
Yeah. You really can't taste the difference.
No.
But like, it's interesting.
It's like these pancakes I get called flapjack. They're gluten-free, but they're protein pancakes. So the first ingredient is whey protein, yeah. And I taste them. They taste the same different. I mean,
You hear that? I mean, some people go gluten-free and makes the difference or helps. It sounds like.
Do it.
I feel like I could like eating wise, but it's like asking or being like, oh, I need to make something that's gluten-free. I'm like, how do I do that? Like,
a lot of people don't know what the hell gluten is. I mean,
yeah.
Yeah. That's what I would have trouble with. They'd be like, well, what can I eat?
yeah.
Yeah.
I
Yeah, that's
guess
the hard
after a
part.
while you get used to knowing what you need to eat.
Yeah.
Yeah. It's just like gluten is a protein that's in wheat, barley, and rye. You know, that's,
So it's like once you kind of know that and remember that.
yeah. It's in, so you think bread, you know,
Yeah.
but it's not just bread. It's wheat, barley, and rye. But then like my sister, she's allergic to oats, so she has a big reaction to oats.
So do you not drink Shiner anymore?
Yeah, I used to be a Bud Light guy. And I stopped drinking. Now if I have like a Bud Light, I get like these flu type of symptoms because I've been so gluten-free for so long.
Now like your
it's
body
introduced
like
it into me.
Yeah, your body just
like really don't want it.
Yeah, it's
like
it starts
rejects it.
rejecting
Yeah.
It's like
Did
this
you just
autoimmune
decide
response.
to just try gluten?
What?
You just decided to try to cut out gluten?
Yeah, I just saw something. It was like on Bill O'Reilly, and he said something like, "Oh, if you're having inflammation, try going gluten-free. Because gluten, you know, is inflammatory because your body doesn't actually totally digest it, and so you have like some people can have like an inflammation to it. And actually, the wheat that we have now is higher in gluten than wheat from like 50 years ago. So yeah. So, but I just eliminated it. I just eliminated a lot of problems that I had. Like the biggest ones was just inflammation.
That's awesome.
I think I have sugar.
You think
Sugar. I think sugar causes me inflammation.
It can, yeah.
But it's so hard to not eat.
Dairy is another
Sugars
one.
in everything.
You stay in Denver or where in Colorado?
Erie.
Oh, okay.
It's just north of Denver.
Okay.
Is it cheaper, I guess, living? Because I've heard Denver's expensive.
Because Colorado's expensive.
Yeah.
Like,
Well, even the neighborhood I live in now, we bought 6 years ago. And it's crazy. I mean, it's almost like our house is almost double. Almost double the value.
shoot, so many people.
Yeah.
I feel like people in Austin, they always like, they'll have summer homes in Colorado or like always go there for the summer.
Yeah. Yeah, Denver is just ridiculous.
And it's not, and the thing about it is,
I've heard the prices are crazy.
it's not by.
And there's some spots in the outskirts and stuff that are cheaper.
Yeah.
But even the Austin now, you know, prices have come up.
Yeah. Oh God. Yeah. The average home price, single family home is $415 right now, $415,000.
Crazy.
And then
It's nuts.
1.5.
That's crazy.
Hot market still is, but it's just a lot.
Which is why more people are moving to Hutto. But like Georgetown, where Susan, I mean,
What's pushing a lot of the like original people that live there kind of
Yeah.
out almost.
Yeah.
Because taxes, I mean,
Yeah.
nuts. Even like East Austin now is so like back in the day, it's like
And
people
I
that
actually
live
live in
there.
Boulder County, so which is like we actually have the highest taxes in the state, and then the highest home prices in the state are in Boulder County too. So, but we live on the outskirts of Boulder County. But if you go like where my wife teaches school, I mean they're like these little small little bitty homes, and they go for like $1 million plus.
Yeah, it's crazy.
Yeah, Boulder is
What grade does she teach?
4th grade.
Oh, 4th grade.
And the thing about it is too is you actually get a regular funding fee, you put 5% down.
Compared to living in Texas and going to Colorado, was it a big difference for you? Like people-wise?
Yeah, people suck in Colorado. I miss the people the most.
Yeah.
Honestly, people in Texas are just better. You know.
Yeah.
But the main reason why I moved there, and I say, I mean, I did make a lot of friends. Because one thing about Colorado and Denver in general is everybody's from somewhere else. Nobody's from Colorado.
Like LA?
Yeah. So like when I lived in Houston when I first graduated, I mean it was like Click City. Everywhere I'd go out, it was like the same people, the same bars every night, and you know everyone just ran in their little cliques that they were in high school with, and it was annoying. But then when I moved to Denver in '98, it was like right around the tech booms. All these people were moving from all over the place, and everybody's like, I don't know anybody. Yeah, let's hang out. Let's go play kickball together, or whatever. So, I feel like that's kind of happening in Austin.
Yeah.
Downstairs and upstairs.
A lot of people from California are moving.
Yeah.
Just send you two scenarios.
So what sports do you play
And then
now?
they all.
I play tennis.
Oh,
yeah.
Okay, we got you. We got you.
No offense, but I didn't think you were on the football team. I was thinking to myself like track, maybe baseball, tennis. Yeah, that's. But A&M's got a pretty good tennis program.
Yeah, we've been good for 10 years now. At least stayed in the top 15, top 20.
I do.
I'm on TexAgs all the time, so they were around Aggieland thing.
There's an employee only door, but it goes into the hallway where the.
Okay, so upstairs though?
Yeah. Mark said you might need us.
It is, but only like 65. But it's going to be night games. So it's going to be long. Yeah. I can watch it from the luxury of my TV.
I'm going, so I'm watching.
Are you?
Oh, I know. Especially if we're going to
Question.
Yes, dear.
Down payment assistance, is that a conventional or FHA?
Both.
Okay, people.
Actually, the VA and USDA you can use it
You
for.
can use it for about any loan.
Yeah.
And it's the 3% for the conventional loan, like the HFA preferred, and then what's the one for?
Fannie is the HF. It's
So if someone's got like
So if you have,
a 650 credit score, they're probably getting an FHA though, right?
More than likely.
More than likely, but one of the things that I tell people is that if you once they get to about a 680, you can actually get them into the 3% conventional because they offer discounted mortgage insurance. So, and their rates are set. So a lot of times, even when they're in that, once they're in that place, we can get them into a conventional, and that way the mortgage
Rates
insurance
are better
eventually
through that than they are for doing a straight mortgage for them. So we push them towards the down payment assistance. Even though it's about $500 or more in fees, it's better worth it than paying it by down right now.
now if you have disputes on a medical condition, they want you to go.
Yes.
I don't think so. You're not a FHA.
They want all of our disputes removed.
Even on FHA. So you guys don't follow the guidelines for FHA?
We've always been told to get them all.
I I've had loan officers that tell me that, and then they go back to their underwriters and they get.
I've never had any other tell me that I don't have to, but I just came out and had the word.
So kind of what it does is
Yeah, no, I was just curious.
so on your
It's the right
but
question.
they
She
look
doesn't
at
get
so they want to
Well, I've had-
Control, I'm going that way.
Well, I would say that I have
Great.
they go to closing.
Thank you.
Would you like any more coffee?
No, I'm good for now. Now I'm gonna be bouncing off the line.
If it's non,
I think it did.
non-medical.
I've been drinking coffee lately, but like last night I couldn't go to sleep. Like, you know, so I was like, maybe I need to just slow down a minute.
You just
It's just not good. And I only
What
drink
time
in the
were you
morning.
drinking?
In the morning.
man, it's giving you that much.
I'm so, and plus I had a headache. I had to take Excedrin PM to like go
Well,
to
that's
sleep.
probably what kept you up.
Headache.
The Excedrin.
Well, it was PM.
Do you guys know why she?
But like, I don't
It
know.
can lower people's credit scores. If you have
It was just,
it
like,
shuts
my brain was
that
going
line
on
down.
off an hour.
It doesn't read
I
and it
couldn't
doesn't
relax.
everything
Right.
Whoa.
Right, it doesn't.
Welcome
that
to
line
real
is
estate.
shut down. So it's never deleted along
I
there.
think
Well,
that's what
I mean,
mostly a lot of people have trouble with. I have trouble sleeping too.
Yeah.
Because they start
Fear
getting
is that if
About
if
all
we
these
do have
things.
negative
yeah,
using that, and that negative item is being removed from the
what it is.
from the scoring model,
You have to work
that it's
on that.
not a true credit score that
It's
they're
hard.
seeing, so the underwriters want to see that
My
the
wife
dispute is
goes to
removed
sleep
and seeing how it's affecting
at
the
like
credit
10,
score to make sure.
because
it's not affecting the credit score.
she's got to be up at
But
like.
the guidelines that came out 5 years
So
ago.
most of the time I
She goes to
stay
bed
up.
Well, and
early.
they change it
And
every
most of the
2
time
days.
I
So, that's what you know, because he's
one sometimes.
Yeah. They could have
Reading
changed it
or
and.
because my brain,
There's just
if I lay
I wanted to
down,
read
Yeah,
so
that's the
bad
thing.
yesterday, but I had a
Each mortgage
headache.
company
It was
has their own delays and
frustrating.
everything.
yeah, if I lay down, I'm like,
I do feel
I
like
need to
underwriters
read
and
this.
loan officers have a knee-jerk
sometimes I'm
reaction.
really tired and I go to sleep at 10.
But and that's why what kind of pushback is like double check with your
It's a battle.
They're like,
Yeah.
oh yeah, Chris, yeah, you're right. We can get the loan today.
I need to get me some new
But that's one of the things too.
medicine because that was actually
You know,
$2.
our, they're not perfect.
I didn't wake up this morning with my head.
My wife told me that before I tried to get a med, but I'm like, once I take it, then I'm gonna be that person that if I can't sleep, I'm gonna be like, oh, I need to take the pill to go to sleep. And I just,
I'm the same way.
I don't want to get caught up in that.
I end up waiting until it's just really bad. Like when I have a headache, I wait till it's really
Warm
bad.
glass of milk.
See, I don't really eat that. And we don't ever have
Also puts you to
it
sleep.
Really?
Thanks for that.
I'm a little lactose.
That's what my grandma would say.
Yeah.
Have you? Did you check? Like, does it work?
I mean, I've done it before. I bought it.
So we're going to get started again. The second half should take about 45, 50 minutes. Now, at the end of the class, there's a sign-out sheet that we need per trek for you to sign at. It's different from the form that we had you fill in the beginning, but we need kind of a check-in and a check-out sheet per trek. So that's why we have those, but the final one is the official one for trek. And we also have certificates for you at the end. And then we'll do the raffle and we'll wrap everything up. So while you're so we want to talk about building credit. We kind of alluded to this before about building credit, in regards to adding credit cards. Are you guys familiar with what a secured credit card is? Have you heard that term before?
It's where you open a savings account with them, so you can secure the
Use your own money.
amount of your credit limit, right?
Yeah, you're securing the amount of your credit limit. That's the perfect definition. Okay. Sometimes the analogy that I use is when you move into an apartment complex, you put down what?
A deposit.
A security deposit, right? So it's securing that. Utilities, you put a security deposit down to get your utilities. I remember that when I was a college student, didn't have any credit. So, but a secured credit card, for those people that don't score in that 30% section that we talked about, a lot of times they may have other things going on and they can't just go and open up a regular credit card. So they have to go get a secured credit card. Now, the question is, now first off, let me back up real quick on the secured credit cards, just so you know. Number one, it's not a prepaid card. So the money you're putting down to secure that line of credit, they're holding on to, okay? And I actually had a client out in East Texas, got to pick on them a little bit, where she's like, "Oh yeah, I used that thing and threw it in the trash. I didn't know." And then it turned out that it turned into a collection because then the annual payment came around. She didn't pay it, but went to collections and so on and so forth. So, but no, I mean, if you have a secured credit card, you put $200 down, you buy a $50 tank of gas. Well, you got to pay that $50 tank of gas back. It does not take away from that $200 security deposit that you put down. Now, there are something that are called debit cards. Now, debit card is not necessarily what your bank gives you. Okay, technically speaking, a debit card is where you put $200 on a card and you debit it off of there, but it's not necessarily a bank card. You get those at like Walmart. You go, you load it with $200, you use it, and then technically you can throw those away. But now they have debit cards that you can actually load. Like a bank. It's got a routing number, an account number, and everything else like that. So a lot of people now are using these as bank accounts because they can't get a bank account. Now, how many people think you can buy a home without a bank account? Good answer. So I'm sure you probably have to learn that somewhere in real estate school. But we deal with that all the time. We have a lot of clients. We had a client we were talking about yesterday that out in West Texas. They didn't have anything. We had to help them get a bank account. We had to help them do all of that and help them fix their credit. But having those little cards that you get at Walmart where you load some money on there and your paycheck can go to it, that's not a bank account. Okay. But you need 60 days of a bank account in order to close. So
and no large deposits, please.
No large
deposits, please.
Yeah. But that's one of the big distinctions that people need to understand about a secured card, because some people say like, "Oh yeah, I went to Walmart and I got this card. I put $200 on it. That's my secured card." No, it's not. That's a debit card. Okay. But then other times people will go say, "Oh yeah, I'm going to go for a secured card. My bank says they have one." So they go down to their bank and they apply and they get turned down. Why do you think they got turned down for a secured card at their bank? Because their credit scores weren't good enough. It's like, well, what do you mean? They're pulling credit when I'm putting my own money down? Some of them do. So you got to be careful when you do that. Sometimes people will go through. I had a client, he went through he had 7 inquiries on there just from trying to get a secured credit card, because he went to all these different banks and he kept getting them shut down. He came to me and I'm like, "Yeah, dude, it's because you got a 486 credit score. No one's going to give you a secured credit card." But he's like, "Well, how can I build credit?" Okay, well, guess what? We have a company, Open Sky Visa, that we refer our clients to. They do not pull credit. Okay.
And we refer our clients to them too, and they work well in getting their scores up.
Yeah. So the one person I've ever had get turned down was actually one of Jane's, but it was because she made a mistake. Do you remember? I don't know if you remember.
Yes, I do.
She put 300 in there instead of 3,000, and then she went back because you remember you emailed me or called me or something. You're like, "Hey, you told me it's like automatic approval." They got turned down. And she's like, "Oh, you know what, Chris? It's because she put 300 in there, not 3,000.
Yeah.
And so she went back, put in 3,000, and they went through. So it's the only time I've ever heard somebody getting turned down. But it was just because she forgot to put a 0 on the end. So
That make a difference.
she what?
I said she's close. She bought a house.
That's good. Good job. That's good stuff. So Open Sky Visa, they said they refer a lot of clients to it. It's super easy. It's $200 minimum to put down on there. You can put down more, but it's better to have more than one. We usually like to see 2 to 3 credit cards on there. There are some other options as well. Capital One has a great secured credit card, but they usually want to see a higher credit score for Capital One. So now, and it's the big difference between revolving and installment loans. We kind of talked about revolving earlier, but installment loan is basically that you are making regular payments on a mortgage, a car loan. There's set payments that you make. If you buy a $30,000 car, have a $500 monthly payment for 60 months. If you pay it down to $15,000, you can't say, "Oh, I need a new set of tires, and I'm going to go use that other $15,000. You can't use that to, it's not like, that's not how it works, okay? Once you pay it down, and you're done. All right, so that's what an installment loan is. But auto, mortgage, financial, student loans all kind of fall into that installment loan categories. Now, one thing to keep in mind, sometimes people will go, some places that will say like, "Oh, buy this refrigerator and it's only $97 a month. And you think that's an installment loan, but then when you go and you get it, it turns out it's a revolving loan. Not good or bad, but it's just one thing that you need to kind of understand, that when you go and you buy, let's say you buy a refrigerator for $2,000 and they give you a $2,000 revolving line of credit and they put it on there and they put you on payments of $97 a month or whatever it is, you're opening up a maxed out credit card. And we see that when that happens, has a big hit on the credit. Dental work is another big one, care credit. You need $3,000 worth of dental work done, they give you a $3,000 care credit account, and you're opening up a maxed out credit card, is basically what you're doing. So it has a big, huge impact on your credit score, negatively. Okay. Other ways of building credit, one is we kind of talked about earlier, I mentioned that Verizon does not report to the credit bureaus and things like that. One kind of exception is, has anyone heard of Experian Boost or seen those commercials?
I have.
Yes.
You've seen them on the credit report.
Yeah, you see them on the credit report, shows up as like telecom self-reported. So, and I'm going to get to the underwriting stuff here in a second part of it, but technically speaking, it wasn't there before. However, I don't know what you guys see, but there are some underwriting departments with mortgages that are starting to look at this and wanting that to be removed before it gets. Are you guys have any problems with those?
I don't think we haven't had any yet, but most of the problem is that typically all we have is one credit score that's good. The other two are crap, so we can't pre-qualify them anyways.
Yeah, and you're sending them to us, right? Yeah,
You're
putting them in the portal, right?
Putting them in the portal.
Okay. So yeah, but here, so one thing we talk about is, so you have Experian that's good, but what about the other two? Rental reporting, right? So we have a company that we've partnered with called Rock the Score, and they will actually report rental payments to TransUnion and Equifax. Experian will not accept rental payments. But if they are working with a management company or in an apartment complex, which a lot of times here in College Station they are, Rock the Score will report to Equifax and TransUnion. Now, if you are actually technically renting your house from your mom, you could actually technically have that reported just to TransUnion. But in order for it to get reported to Equifax, Equifax actually wants to see that it's a management company that has an LLC behind their name, or S Corp or something, or a corporation, or like a big corporate, apartment complex. But if they're an apartment complex, they can pay a little bit of money and do this. Then one cool thing about this is they pay a little bit extra, like $100 to start. It will actually go back 2 years of rental reporting and show the past 2 years that they've been paying on that rent. So we've seen people get as much as 40-point boost in their score just by doing this alone. So when you combine that with the Experian Boost, combined with getting secured credit cards, these are some really powerful things that can happen to help build someone's credit score and get their scores up pretty quickly right away. Along with some of the other things that we do to help with the negative stuff. And we're going to talk about the negative stuff here next.
So that rental reporting, you have to pay for that?
It is. It's like $8 a month, I think.
Okay.
So you pay $8 a month and they continue to report your on-time rental payments. But I think if you decide to do it, it's $25 setup fee if it's just the ongoing from this point going forward. Or if you're somebody that's got a history, you can pay the $99 setup fee, and then it'll report back 2 years. So if you're getting somebody into a rental property right now, they would just pay the $25 setup fee, then the $8 going forward.
Right.
But if there's somebody like, we're trying to help you out, let's get you some back rental payment history, or some back rental history showing on there, they pay the $99 and then the $8 going forward. So. But make sure you go to the link that's on there. Is it in the? It's in the packet, right?
On the Rock the Score.
Yeah, but the elevate-my-scores, because there is a discount involved by going through there since we are a partner with them.
Okay.
So let's talk about some negative stuff, bad stuff. We got the bad guy with the Social Security card here. Identity theft. Okay, anybody heard that term before? It's not really used much. No one really talks about it. Just kidding. It seems like almost every other commercial is something about identity theft, and then as you soon turn around, it seems like it happens. Has anyone had any kind of identity theft or anything that's happened to them or been part of the Equifax breach?
Not that I know of.
Pretty much everyone should probably raise their hand. If you haven't, you should probably go to Equifax and you can see you probably were part of the breach.
It was something that was happening in this PCS area because it happened to us. Our house was sitting empty, and they found it out by seeing it listed on Realtor.com or Zillow or whatnot. So they went out and they got a cell phone in my husband's name, went to Dell and went to somewhere else, had the cell phone sent to our house. The guy was sitting there waiting for it to come. Picked it up, took it. The only way we found out about it is I got a declination, however you say it, letter from my husband from Dell. And then I got a letter from Sprint saying, hey, you haven't paid your cell phone bill. I've had AT&T since 1997, you know, so it's like, what the hell? So, and then, like, it was so weird, like 30 to 45 minutes later, a sheriff's deputy from Brazos County calls my husband and says, hey, I just want to tell you, this is what's going on in the Bryan College Station area. They caught the guy by a ring at a place that was sitting empty, and I went up and got it, and they hadn't caught the big guy that was up above, they just caught the guy that was doing the running for him. But so that's something that's going on. So just warn your people if it's sitting with an empty house.
Well, it's crazy. There's so many different things out there. It's just, it's insane. Yeah. But from a standpoint of your credit report, FCC did a study and they found that 70%, 7 out of 10 credit reports have some sort of detrimental error on their credit report. Okay. So one of the things that we do is all of our clients that sign up in our program, we have them sign up with Identity IQ. Okay. Now the big reason why we do this is so that we can continually track their credit progress, see what items are coming off their credit report, making sure their scores are going in the right direction, things like that. But one thing that Identity IQ does is it actually gives you $1 million of identity theft protection as part of their service. So if it's something that you're interested in, you could actually go to our website, go to Check My Credit Score, and sign up. You get a little bit of a discount going through here for $20 a month. It tracks your credit scores. You get a new credit report every single month with 3 new credit scores every single month, plus that $1 million of identity theft protection. Now, sometimes if you have homeowners insurance, some of that might be protected underneath there, so just double check. But it's something that when we're working with clients, like, hey, this gives us an added protection, because we've had clients that have had their identity stolen while they're in our program, okay? And that's why this can be important, because we can lean on them to help get it fixed. So let's talk more in depth about identity theft. So we've got mail theft, dumpster diving are kind of pretty similar. So dumpster diving is not a sport here at A&M. It is actually where people are diving into trash and stealing it. Okay, but why are they doing that? They're trying to get your information. Most of the time, that information is getting sold out on the dark web. But in some cases, they're using that information right away. But they just want to try to get some information. Now, every once in a while, like with mail theft, dumpster diving, they do hit pay dirt, and that happened. Several years ago, my wife and I, we lived in a rental house, kind of more out in the country. We had, we didn't have a locked mailbox, and Chase sent a new card, like for no reason whatsoever, and they got it, and they went to a local Target, and boom, they were able to put like $500 on there without it being activated, because I guess Chase had this thing where you can actually use the card without activating it first, up to $500. But we weren't responsible. Because we did show that, hey, we weren't even around. We were in North Carolina. We weren't at our home. We proved that, and then they put the money back in there. So, pre-texting. Now, this isn't something you do before you send a text. This is actually when somebody knows a little bit of information about you, and they use that against you. So, Susan actually has a great story about this.
Yeah, I do. So, like Chris said, they're paying money. So I got a call probably about 3 weeks ago from somebody that said I had an old debt in 2012, and they were going to serve me with papers. Now, if you know a little bit about how that works, you can't actually do that if that debt is that old. You're right. So I knew that, but I still was really threatened. They knew my social security number, birthday, addresses I had lived at for the last 30 years. They knew some personal references. So I think they must have somehow hacked in and got an old loan application from somewhere, just by the kinds of information that they had. They wanted me to pay $300 so that they, to keep, the service from actually happening, being served. And I was really panicked, I called Chris, like, I got a teaching license, I've got an insurance license, I can't have a judgment on my record, like, what am I going to do? And he kind of talked me off the edge and said, there really doesn't make a lot of sense if you look at all of these big and so we just thought we've got to use this as a teachable moment to tell everybody there are people that are getting information and they're using it to try to do whatever they can. A lot of senior fraud fits into the category of pretexting as well. You're all nodding your head. Maybe your parents have gotten a similar phone call like, hey, this is your grandson and I'm in jail and I need bail money. Yep. I know, right? And our mom too. And she called me, she didn't, give any money or anything like that, but she was still worried and called and said, is Robbie okay? I'm like, well, I think he's at high school, Mom. But somebody, said they were our grandson and they were in jail in New York, so anyway, but that, just really, really terrible.
I recently,
Okay.
you can put family or mom maiden names and stuff like that because they are using that too. Is if your mother's maiden name, that's a question on a lot of applications and things like that.
That's true.
And so I took off family, like who my daughter is, who this is, because our information's out there. And I was like, oh my gosh, we're putting all of this.
Little questionnaires. They're like, no.
Oh, yeah.
Yeah.
You're like, wait a second.
Like all of your data.
What was the name of your first boyfriend or girlfriend?
They can just go back on your Facebook.
Yeah.
Oh, that's true.
So because I have my middle name and my last name and my maiden name is my middle name. And so I recently just changed it back to my middle name because then they can go down to my daughter and her credit, what's your mother's maiden name? Well, there it is.
Yeah, it's and that's all kind of falls into that category, and it's scary. Shoulder surfing, basically somebody looking over your shoulder, like on a plane, stuff like that. Yeah, so if you feel like somebody's like phishing, not something we like to do. Here in Texas, this is actually when you get emails to click on and get information. Another one that kind of fits into this category too. We actually got this email this week. Like, oh, here's your CD. Here's your closing docs, right? And it was. I looked at him like, I don't know this loan officer. But the funny thing is, I've actually mistakenly been put on those emails before, where like, oh, I meant to send it to a different Chris, and you popped up and I hit enter. But in this case, I was like, no. And one thing I included to was the prefix. So that the area code and then the prefix started with the 0. It was like 049. I'm like, well, you can't have 049 as a prefix. So, but that can be skimmers is little things that are put on the outside of gas stations when you go to get your gas at H-E-B or whatever. And you can go up, give a little jiggle. A lot of times now they have like little lock lights on there you can see. And they're also supposed to put tape on the outside to show that it's been inspected. Then if it's cut, you may want to go inside. Now, if I'm with my kids, I definitely don't ever want to go inside. I want to be able to pay at the pump. So sometimes that can be a pain if that ever happens. I don't know if you guys have little kids or have had little kids, and you never want to take them inside a gas station because you're going to come out with a bunch of candy and toys they should have had to begin with. Breaches, big topic. Equifax, obviously the big offender here. And a lot of the Equifax breaches actually came from some of the online tools that they have. That's where a lot of the breaches happened, was through that. So, but it was a big deal. And then ransomware, something pops up on your computer and they want, Bitcoin money or whatever deposited in this bank account for them to unlock it. And a lot of that comes from when you click on those things that come through, or you go to a website you shouldn't have, and boom, you get ransomware on there. And then wire fraud. This one's really big in the real estate industry. There was a title company that's no longer with us out of Austin that got hit with this, where money went to the wrong wrong person because there was an email address that they faked, but it would look like one, and they said, here, send the money here, and they sent it, and it disappeared. But that's a big thing to be careful of, especially when the closing happens.
That happened actually to a local title company as well. When I was doing real estate, one of our sellers, they got an email thinking somebody posing as the seller, and they wired the seller's funds to an incorrect party.
Yeah.
It was a fun one.
Yeah. Yeah. And then actually kind of something similar happened at the school district where my kids are at, that in the school they're building, that they just built in our neighborhood, and it was, big project, and they sent an email to the school district saying, like, oh, hey, going forward, all the payments need to be sent here, and they gave a routing number and all that kind of stuff. And so they were like, oh, okay, yeah, that's a lot easier. So they started sending all the payments that way, and then all of a sudden they got a call from the general contractor like, hey, you guys, what's going on? You're a big school district and you're not paying your bills. Like, what do you mean? We've been paying you guys, every week. Like, well, we're not, you're 3 months behind. We don't have all the money. And then it turned out they've been paying through this through wire fraud. And he's like, well, we don't accept wire fraud. We want you to go send us a hard check. And so the FBI got involved, and I think they got about 75% of the taxpayers' money back. But it ended up being about $500,000. Yeah, it was $500,000. Jeez. So, next. So most of the stuff we talked about in identity theft, most of that stuff does actually not rise to the level of things showing up and affecting your credit score. What really impacts your credit score more are identity-related errors. Okay, one that happens quite a bit is same last name, same zip code. So if your name is Johnson, Smith, Jones, Gonzalez, Lopez, a lot of times you're going to have things end up on your credit report that don't otherwise belong to you. Okay.
We've got a client now whose last name is a common last name. He lives in Round Rock 78681. If you've been around Round Rock, Texas, it's a really highly populated area. So imagine just statistically having that kind of a common last name in a big zip code like that, right? And I'm sure there are lots of places around Texas that are like that.
Juniors and seniors, another one that's commonly has cross-reporting. So if you have like a similar name, sometimes it doesn't even have to be, maybe father and son have the same name but a different middle name. You see that sometimes. A lot of times those things can still end up having cross-reporting issues on there. Now this one is kind of interesting in that if 4 letters out of your name match with 7 out of the 9 social security numbers, then your files will actually merge. Now the story that I always tell about this is I had a client, his name was Roberto, and he came to me, he's like, oh, my identity was stolen. And I'm pretty sure it was by this guy named Robert. Okay, let me take a look at the credit report, took a look through there. And as we're going through, I asked him, like, hey, can you tell me all of the items that are negatively impacting your credit score that aren't yours? And one of them was, or not the negatively, just tell me all the accounts that aren't yours. And he told me like some medical collections, things like that. And then one of them was actually a Chase card with a $3,500 credit limit on it, $500 balance, been opened up for 7 years, no late payments whatsoever. I was like, that's weird. So you're saying this guy Robert, your credit, and has been making the payments on time every month for the past 7 years? And he's like, yeah, isn't that crazy? And we're like, yeah, Robert's like the most honest thief ever. And you go meet this guy. And I knew the answer before I even asked it. Poor Robert actually did not steal Roberto's credit. What happened was their social security numbers were 1 digit off. Okay. But they had pretty much the same first name. So their files merged. And I'm sure probably Robert out there somewhere in the ether is saying, oh, this guy Roberto stole my credit report. But it could be a big problem. Now, a lot of times in the mortgage industry, they will actually catch this because, and in this case, the loan officer just didn't catch it when he sent it to me because it said social security number mismatch on there. But we were able to get it corrected and get a lot of that stuff removed from the credit report. So other kind of negative items, collections, repossessions, foreclosures, identity fraud, divorce-related issues, judgments, medical. These are all negative items that can negatively impact your credit score. Now, just a little bit about an aside, and from the credit repair standpoint of one of the things that we do with clients is we use the Fair Credit Reporting Act, the Fair Debt Collection Practices Act, and in some cases the HIPAA privacy laws to actually challenge the negative items that are on their credit report. Because the Fair Credit Reporting Act states that everything that shows up on your credit report has to be accurate, verifiable, complete, and non-obsolete. And so what we do is we open up an investigation to make that creditor provide information back to the credit bureaus to show that they have the legal right to be reporting it to the credit bureaus. And if they cannot provide that information back within 30 to 45 days, then by law, that item must be deemed erroneous, and the credit bureaus then must remove it from the credit report. So that's a big part of what we do to help clients, increase their credit scores. Next. Collections. So the big question to ask here is how many people think that paying a collection removes it from the credit report? Maybe ever thought that?
How many what?
You did it one time? Mm-hmm. Yeah.
Think that paying a collection will remove it from your credit report.
Yeah. How many people think that paying a collection will help your credit score? Yeah. How many people?
Eventually.
There are some cases. Yeah.
There are some, but eventually, if charge-offs actually, for some reason, paying off a charge-off.
Profit and loss. Yes.
Yeah.
A revolving profit and loss. Yes.
They will.
That's the asterisk.
Yeah.
But how many people think that paying a collection can hurt your credit score? Anybody? Jane, do you think it can?
Yeah.
It can, definitely.
Yeah, because if it wasn't reporting before and you bring it back current, it drops your score.
Yeah. So what happens is it renews the activity. The story I always tell is a poor lady called me up. She was in tears, single mom, 3 girls, trying to get her life back together. Found the home of her dreams, put down her money to get the house, her earnest money. And she got a call a few weeks before closing saying that, oh, you have this medical collection, and if you're trying to get a mortgage, you're not going to be able to close on this mortgage loan with that medical collection. And so you need to pay us right away. Oh, by the way, because we're such great people, we're only going to charge you half of what you owe. She's like, okay, I got to get this house. I'll do whatever. Here's the money. Boom. Her credit score dropped 15 points because it renewed the activity on an old medical collection. Her scores dropped. She was, of course, lied to because you can close on a mortgage loan, no problem, with medical collections. Right? Now, they still impact your credit score, but the underwriters do not care about them. Okay? So it was a complete lie. That wasn't fraud because she did own the debt, but they just lied to her to get her to pay it.
She couldn't close on her house.
She couldn't close on the house, right? Because her scores, she was a 650, and at the time you needed to be a 640 when this came through for FHA was the hard minimum for that. So when she dropped below that 640 line, she dropped down to a 600. She could close. So the loan officer sent it to me or gave her my number. She called me in tears. But I was able to get that removed, and her scores jumped right back up pretty quickly. But it's one of those things to understand that when you have collections on their credit report, you need to be careful about what you're doing. And a lot of times when we talk to people, one of the things like, you know what, I'm just going to do this myself. I don't really need you. I don't need your help. And what that says to me is I'm going to go pay off all my own collections. That's what they're really saying, and I know that. And I think this is where I kind of interject, like, why is this important to you guys? Because you're the ones on the front line. So if you can get your clients to understand, it's like, well, before you just decide to go DIY, it's kind of like that guy's like, honey, I can fix it. I'll go in there. I'll do the plumbing. I can do the electrical. And all of a sudden the house burns down. It floods, right? But it's the same thing like with your credit. You're going to DIY it, but sometimes you can make matters worse by, and I remember talking to those ladies like, oh, is that why my credit score dropped 90 points when I paid all my collections off? I'm like, yeah, that's why. But sometimes we don't even get to people in time, but if we can talk to the realtors and get them to understand, so you can tell them like, well, I know you think you can do this yourself, but you really need to talk to Jane first, and then she's got somebody that she can refer you to as well that can help with this process. Now, I'm not saying don't pay collections. That's not what we're saying here at all, because there are some definite times that paying a collection can make sense. And one that, Christine brought up was like with a profit and loss or a charge off on a credit card. The best example is First Premier. First Premier is probably, and I was telling Susan this morning, I see more First Premiers in collections than I see First Premiers in good standing on people's credit reports. Because they will charge them off and send them to collections like that. And a lot of people get them when they're trying to get that second chance credit, which is why we never refer people to First Premier when they need a secured credit card. But a lot of times we'll see somebody's got a First Premier credit card, it's got a $300 limit on it, a $450 balance, and it's in collections or profit and loss. So it's 150% utilized at that point. Going back to that 30% section where you talked about utilization, remember the higher that percentage is, it's bad. Well, 150% is really bad. So that actually ends up negatively impacting your score in that section. But if you take that same collection and you settle it, when a lot of times First Premier will take like 20 cents on the dollar, and you settle it for like $100 in that case, and it shows 0, your scores go up because now you went from 150% utilized down to 0. And oh, by the way, once it's settled, we're pretty good at getting it off of the credit report. So those are the things that we go through with the client when we're kind of what we call credit coaching, where we coach the client on things that they can be doing, on their own. And some of them will look at specific collections that may need to be taken care of. Rental collections, like if they have apartment complexes, sometimes those could be a problem with underwriting. We know that. So we'll kind of guide people, through like maybe that is one that we need to try to settle. But we'll also look at collections, because sometimes collection agencies will just randomly update the date of last activity or continually update the date of the last activity. So if the date of last activity is within this last 6 months, maybe that's one they can go after and get settled and paid without negatively impacting the credit score. So you just got to be careful. You need a professional. Just like if you're going to do wiring your house, you don't want to DIY it. You probably want to get an electrician to come in there and wire your house before you start trying to fix your own credit. Sometimes it's best to have a professional look at it and always talk to Jane first. So actually, this is the point where I'm going to make Jane talk again.
Stand in the front too.
Me working back here.
Or Chrissy, either one. So here we're going to talk a little bit about the different the impact of credit on the different loan types. So as far as credit scores and stuff like that.
So you want me to start?
So just talk about just go down the line, like what credit scores do you need, and what kind of things do you look at from a credit perspective on the different loan types?
On FHA, you can actually go down to 580. It's a brokered loan for me from 580 to 600 on a case-by-case basis, which means that if I've got somebody that's got low debt to income and the credit is low because of medical, I'm doing it in-house instead of out. I don't lose control when it goes and it stays in. I lose control when it goes out. Not a good thing with me. USDA is 600. USDA with credit, you guys don't want to know the other particulars of it, but USDA is probably one of our harder loans to get because of the debt to income ratio and where it has to be located. VA is 600. Conventional is 620. TSHAC, SEF, TDHCA is all 620, or there's one of them's got 600.
Seth is
Seth
600.
Gold Star.
Seth Gold Star will do 600.
There's a Seth and a Seth Gold Star.
Yeah, well, there's a Seth 5-star and a
Yeah.
Seth Gold Star. Yeah.
What's SETH stand for?
Southeastern Texas Housing Corporation.
Oh, okay.
So if you want the down payment housing assistance, you need to have a 600.
I'm sorry, one more time? Did you ask me a question or did you?
Yeah, the down payment assistance program, they have to have 600.
One of them, yes, and some of them are 620.
That's good to know.
Seth 5
I always learn stuff too when I do this class.
Is it 620?
Seth 5-star is 640. So they're all different, but that's the thing about it is that we work with all of the down payment assistance, so we can find the right box that you fit in, basically. Once we have your information, that's when we're gonna say, here's the programs that you're eligible for. And here's the pros and cons between the programs.
Yeah. The one other thing I would add on conventional is it's kind of a 20-point tier, right? So the higher your credit score is, the better your rate is going to be on conventional, and it's in a 20-point tier. And also with conventional, if you're not putting 20% down, your PMI is going to be affected, your MI is going to be affected also based off of the credit score. So the lower your credit score, the higher the MI is, and a lot of times it doesn't make sense in some cases to do conventional when your credit scores are lower. And I tell that people too, is like, well, if the higher your credit score gets, the better your loan options become. Would you agree with that?
Yes. Well, that's what we were talking earlier about Seth Gold Star. We have that with the conventional loan. If you got a lower credit score, we're going to push you towards that. Not steering. No one steers, right?
Right.
We're going to suggest
Options.
that you look at this and say, because the credit, they set the interest rate, whether you're at a 600 or a 680, it's going to be the same interest rate. Okay, so we're going to have them look at that situation to see if that's better for them than doing FHA.
Yeah. So it's all about those better options that come into play the higher the credit score gets, and that's what I tell people all the time. It's like, and some people they're like, oh, okay, well, when I get, I need to be Jane says I need to be a 600. I'm a 601. I'm going to cancel your program. I'm like, well, your scores need to be higher. You can have a lot of better loan options for refinances and stuff like that down the road. Because with FHA, how long is your PMI on the loan?
Life of the loan.
Life of the loan, right? Yeah,
Life of the loan.
exactly.
And I will say that just because you have a qualifying credit score doesn't make you automatically qualify for the loan program, because like the lower your credit score, the more stricter they are on the ratios. On FHA, for instance, technically you can go up to a 56.99 back in, but if you have a 601, you ain't getting a loan with a 56.99 back in.
What score do you need to get that higher DTI?
That high, probably at a minimum, at least 640, wouldn't you say? Maybe even over 660. But
And they're getting a gift on top of it.
yeah, then that's where T-Shack sometimes comes into play, because on FHA, T-Shack is a grant program, which counts as a gift. And so that lower credit score, the gift won't go through. Seth Gold Star is a forgivable second lien. That'll go through. So there's a lot of ins and outs with them that we work with the different programs to make things fly.
Yeah. So that's why, again, going back to why is this important to you guys? So you can really illustrate to your clients. Sometimes it's very frustrating when I have a client. In fact, I was telling the loan officer, it's like, what do you mean they quit the program? Like, yeah, they called and they canceled 3 months ago, and they said they were qualified. I can't get the loan done. They're like, I don't know what, it's like, oh, but they got to a 600 and they called and they canceled. Like, they get upset but what people don't understand is that, like, when our program, we're helping you get this credit scores going up, and people can cancel too soon in our program before they're truly there. And the higher your credit scores are, just the world of opportunities start opening up with the loan, and now the highest, like a conventional, really there's no hit after a 740. Is that right?
On
Conventional.
On interest rates?
On interest rates.
That's not correct.
So 760?
It's about 780.
780?
780 is pretty much, you gotta have a 780 to get the best credit, to get the best interest rate.
Okay. Yeah. It goes up and down.
And PMI for that matter too.
Okay. So 780 is kind of the magic number then, yeah. So, that's why I always I like having loan officers here, because this stuff, like you guys, changes every 2 days, and I can't keep up with it. It's not my job. So I think that's everything. Did you guys learn something?
Yeah.
This is great.
What was your question?
Well, so if I've got a client that I think needs your services, can you talk about kind of what you guys charge, and tell us a little bit about how that would work?
Yeah, so if you have a client, kind of depending on the situation, in some cases you might want to have them run through Jane. If she's got that new thing where it does a soft pull. So it might be a good idea to run it through Jane first, and have her take a look at it. She's very good at referring clients over to us and keeping you in check with them. But I guess if you do have a client that like, oh yeah, I looked at their Credit Karma score and it said 490. Yeah, maybe that is somebody you just want to have call me directly and not waste Jane's time. If you have a client, you can just email Susan. You've got her contact information, that information. But if it's somebody like you think is borderline and you want to know first, definitely run it through Jane and her team first to see if it is somebody they can get qualified.
Is it a case by case? Like, some people have really convoluted credit.
If it's bad credit, just send them straight to us and just let us know that you're going to be using Jane for that, and we'll tag her to it. So she'll be able to see that and actually track that in their portal.
But sometimes sometimes, if someone has a really thin file and she could make a few recommendations, and that would actually be a better financial decision, for that client. Jane would be really good at giving that kind of advice, so that.
Now, do they pay for it out of their pocket?
So they pay us directly. Yeah, so mortgage companies cannot pay for this by law.
The varying fee, what is it average?
So we have different programs that vary in price, service level, and time to completion. If you look on the back of the RAT card there, the 3 different programs. The standard plan is the one that, so we ask one question of our clients, like, what's your biggest motivating factor here? Is it going to be your budget or your time frame? Sometimes it's a little bit of both. If they're a more budget oriented client, they're probably going to look at our standard plan. The standard plan, it's normally $100 to get started, but any clients that you refer over will actually get $50 off of that. So they pay a $50 setup fee and then a $70 monthly fee. And it's a cancel anytime program. They work with us till they're satisfied. They call and cancel at any point.
Especially when they can do the potential of being a homeowner.
Yeah. But if time's not on their side and they need this done quickly, our premium package, we do a lot for them. We're sending out a lot of investigations, sometimes 40, 50 investigations a month that we have to work on and send out for the client, plus a lot of very in-depth credit coaching with them. That one's going to be a little bit more expensive. That one's $400 to start. They get a $100 discount, so they pay a $300 setup fee and then $150 monthly fee. Now, if you compare that to like White Jacobs up in Dallas, we talked to a client recently. I'm getting quoted $3,000 to start and over like $350 a month from White Jacobs. So, and I guarantee
if you can afford that, you got spending problems.
So, I know that our premium package does a lot more than that.
How many months do they have to pay? Like what's the minimum? 6 months?
There's no minimum, but the time just varies on how long it takes to get them where they need to be. In that standard plan, I'll be honest, in the standard plan, we have some clients that have been in a year, but I would say that's not typical. Most of our clients actually do sign up in our plus plan, which is kind of our in-between plan. That one's normally $200 to start with a $50 discount. They pay a $150 setup fee and a $120 monthly fee. And that one's kind of comparable in cost to, like, say, Lexington Law, but it does a lot more. Now, the plus and the premium plans are both unlimited plans, meaning we're going after every negative item on their credit report, versus, like, let's say Lexington Law, for example, they go after 3 every time. So, and Lexington Law charges $99. So, but this one, all of our plans also include the cost of the credit monitoring, which is that Identity IQ we talked about. So that's why we quote that up front, so there's no confusion. So when I say 120, we're charging $100. They're paying $20 to Identity IQ, and that's why it's $120 monthly. So because it's very important, so we can continually track what's going on. But that one, I would say on average, the plus plan is about 5 to 7 months on average in that program. But if somebody's, and I have these clients that they're in the high 3s, low 4s, it's. And they sign up in our standard plan, and then 4 months later, they're like, "Well, why isn't my credit score, where it needs to be at?" I'm like, "I don't know. You know me." It's like, why is that broken leg not healed yet after a week? It can take a while for some of those people to dig out of that hole. But if somebody's really close, they just have a couple medical collections, they're 20 points off. Yeah, it could be 2 to 3 months sometimes, if not shorter. So, that answer y'all's question on that?
Do you pull the credit and go over what's going on with it prior to this and kind of give them an idea?
Absolutely, before they pay us anything. So if, in some cases, we'll get a credit report from Jane and them, but we don't require it or anything. But a lot of times, we will actually pull up the credit report using the credit monitoring service. They do have to pay $1 to the credit monitoring company for that trial for us to see the credit report. So I don't want to say it's a free consultation and they're not paying us. We're not charging them anything for the consultation, but they do end up paying $1 to Identity IQ so we can take a look at the credit report, review it. If they decide, what, this isn't for me, they call, they cancel with Identity IQ, and we part friends. But if they do decide to work with us, they keep the Identity IQ and we move forward from there. But yeah, before we charge anything, we talk to them about it. And first and foremost, we let them know, can we even help them? Does this sound like is this a file that we can help you with? If there's stuff on there, I'm like, yeah, I can't really help the fact that you filed a Chapter 7 bankruptcy last month. I can't really get around that. I can't really get around the fact that, yeah, you paid your mortgage late for the past 5 months and you just got a current last month. I can't help you with that, but I'll say like, hey, but you got a mortgage late. We can start working on other parts of your credit report. And then after 12 months, once that guideline issue drops, then we can, you can see your scores come up from there. But there are certain things that we know. We understand the mortgage guidelines as best as we can, trying to stay in touch with people like Jane to understand what's going on in the mortgage business. So if there's anything that's a guideline stopper, stuff like that, we'll let them know. Like, hey, you have a student loan that's in collections. Like, oh yeah, well, can you get it removed and help me out? Like, sure, technically by law, per the Fair Credit Reporting Act, you can get any negative item removed. But if you're trying to do an FHA loan and you have a student loan in collections, guess what? There's this little report that every mortgage company is going to have to pay their pavers at that point. So we'll tell them, like, look, if you have no intention of getting caught up on this student loan, we can't help you. So there's little things like that. We'll go through and make sure that they're a good fit.
Just when you're done, I wanted Christine to kind of talk to them about a program that we have that I'd like to sign you all up on. And the reason I'm having her talk about it, because most of you know she's a licensed broker here in town and wants you to know how much it helps you, not just us.
Yeah. So one last thing, and then we'll turn it over to Christine, is if you like the class today, hopefully you did, you can go, actually one of the best places, if you go to our elevatemyscores.com/Google and go to our Houston page and give us a good review about the class on there. That's very helpful for us. As you know, social media is a big way to kind of help get the word out. But even if you just give us a good review on Google about the class, not about our services, you can talk to Jane and she can let you know how our services are. You guys may or may not know that, but hopefully you can at least give us a good review about the class so that other realtors can go in and see that as well.
We have 2 other housekeeping things too. We've got certificates for everybody, so you can keep on file. No big deal, not official, but just to say that you completed the class and everything. And then we have our drawing too. So.
Okay. I'll let you draw.
It's gonna be yourself.
Oh, it is.
I think I have 2 though.
All right. Well, is that you?
Yeah.
All right. Well, Crystal.
Yeah. Awesome. Good job. Awesome. Thank you.
You're welcome.
Oh my God, that's hilarious. What are you doing?
She can got certificates on top of it.
Yeah.
Hey, first